What's up, everybody? This is Buddy Smooth Crypto. I'm your host, John, and on today's episode, we'll be covering timeframes. What are timeframes? And what are the differences between timeframes? Before we start the show, I would like to remind you that Buddy Smooth Media is a sponsor for the Litecoin Summit 2022 in Las Vegas on October 21st and October 22nd. And to celebrate, we are doing giveaways. If you would like to be considered for the giveaway, you must be subscribed to all of our social medias. I will leave a link down below in the description. Show us proof that you follow all of our social medias, and you'll be entered to win $1,000 in cash or crypto. As simple as that, so don't slip on it. Alright, that's enough of announcements. Let's get into the show. What's the difference between monthly, weekly, and daily time frame candles?
That's another great basic question for a new trader. So let's go over here, and I just click over here on the W, which stands for weekly. So let's click the 1 month chart. So allow this time to load. Let me adjust the chart. So every candle you see here, this current red one, this green one, this red one here, look at the dates here at the bottom of the screen when I'm over the candle. So we have June 1st, 2022. We have July 1st, 2022, and currently August 1st, 2022. So all of these candles represent 1 month worth of trading.
Okay.
So all of June, this is the price action we had.
It was a bad month.
Oh man, terrible. Terrible.
Yeah.
So for all of July, this is the price action that we had
It looked
for
better.
the entire month. The top of the wick again is the highest point price went. The bottom of the wick is the lowest price went for that month.
For them.
Okay. So, and they work the same. So, you know, we dump down here. This is where the green candle opened at $20,015. We closed at $23,363. So that made the candle green because we closed above, or excuse me, when the candle body closed, we were above the open. Okay. So that's why the current monthly candlestick is red, because when we opened, we're currently below where the candle opened for August. So when it comes to what the different time frames, so now if we go from the 1 month to the 1 week, each candlestick now represents 1 week, 7 days worth of trading. Okay. So each candle you see here, this is 1 week worth of trading here. This is 1 week worth of trading. 1 week worth of trading. That's all. Each candle represents 1 full week of trading. So for this candle, the high, the top of the wick is $24,264. The bottom of the wick is here at about $19,500. So that's the range for that 7-day period. And then, you know, Sunday at 5 p.m. Pacific Standard Time, the weekly time frame closes and starts a new weekly time frame candle. So that's all that means. And you could go to the daily. So now each candlestick here represents 1 week worth of trading, 1 day worth of trading, excuse me. So that's why, you know, that's why the charts look so different when you go to different time frames, because now we're seeing a shorter time, right? We're seeing here from December 30th, 2020 to current time frame here of August 28th, 2022. But now if we go to the weekly time frame without even adjusting the charts, look, we could see all the way back to 2015. We could see when Bitcoin, or what is it? Yeah, when Bitcoin was created. So, you know, with the bigger time frames, your analysis will be a lot better, a lot more spot on. But the problem with the large time frames is, I mean, things take a long time to play out. You know what I mean? If you're looking at the weekly time frame, a movement, you know, to the next Fibonacci of the 236 may take, if you could just imagine it in your head, it may take until the 26th of September. So then if you look on the daily time frame, you're going to have to do a lot more analysis. Like, I mean, I could draw a fib from here to this swing low. I could draw a fib from the overall, this high to these lows. I could draw a fib from this high to these lows. I could draw a fib from this swing low to the current swing highs. So you could have a lot more information, a lot more technical analysis tools and indicators on the daily time frame, but it's just going to be less reliable.
Yeah, as a rule of thumb, we don't really rely on the daily time frames. We mostly rely on the monthly, the bigger time frame, and then weekly, which is a smaller time frame, but is big enough that you can see a bigger movements coming in and out.
Yeah, my favorite is the weekly time frame, just because you still get a ton of information. Because look, just what we're looking at right here goes all the way back to, early November of 2019, and when we were on the daily time frame, it only went back a couple months, really.
Yeah.
So you get a lot of data on the weekly time frame. The larger the time frame, the more data you're obviously looking at and doing analysis on. So, I mean, that's good for that question.
Okay, awesome. I hope everybody learned something today. And if you did, please like, comment, and subscribe to this YouTube channel. Follow all of our social medias, and you'll be entered to win $1,000, crypto or cash. Don't forget, there will be more lessons coming out as we go. That's it for today, guys. I hope you guys enjoyed this episode. Please make sure you subscribe before you log off, okay? Catch you guys in the next one. Peace.